are a proof positive statement that you can make an impact and outperform.
Impact investing is really compelling from a macro standpoint. It allows investors to continue investing from a long-term perspective and achieving their long-term goals, but also investing through a more purpose-driven approach.
Impact investments for Arnerich Massena really means that we are investing thoughtfully and strategically in investments that are going to affect social and environmental change on a global scale.
Tony's philosophy, which has really become our firm's philosophy, is that this is not philanthropy, and we're not willing to give up 1 basis point of return.
So impact investing to us as a firm is ultimately a double bottom line return.
So for us, trying to define it was we wanted to take all the important concepts that socially responsible, that ESG, that impact, and all of its sub-sectors would have to catalyze and synthesize around a portfolio that investors could sink their teeth into.
Tony and I identified an opportunity about 10 years ago, really focusing on kind of what the world needs as opposed to what the world wants.
So what Arnerich Massena decided to do was to invest in those themes around water, renewable energy technologies, food and agriculture, and healthcare to meet that growing demand of a global population.
We want to invest in what the world needs, and that could mean something completely different for one client versus another. So I think we want to equip them with an array of different options and scenarios and ultimately let them choose the ones that align the most with their core values.
This industry, the consulting industry, is made its mark by driving the bus through the rearview mirror.
From an investor's perspective, if you are really truly looking through the windshield, looking forward into the future, and not just relying on the past to indicate what you should be investing in, then it's pretty obvious where there's going to be future demand, future business opportunities, future technologies will arise from a growing global population. And so if you are buying into that and want to affect change and want to support those new technologies and new drivers, it's a pretty obvious opportunity.
This is a segment of the market that we really think is going to have the wind behind its back for the foreseeable future. These aren't necessarily high-tech growth companies that the market has really fallen in love with in recent years, but rather they can be more mundane resource efficiency type companies that have been largely unloved and unrecognized by the market.
Well, first we look for, can they manage to a financial return? Second, how do they drive and measure that intangible benefit in some instances? And if it is intangible, what are the metrics they use? Meaning, how do they measure it? How do they drive that value? And then can we convey that to clients that then it resonates at their level?
Our approach to evaluating managers really shouldn't and doesn't change whether we're looking at a traditional manager, an ESG manager, or an impact manager. All the criteria that has driven to so much success that our firm has had in identifying great active managers applies to the impact world as well.
There aren't very many firms that have the passion and vision and execution of Arnerich Massena in our industry, so we want to take that 30-year learning and apply it to this genre so that we can continue to be successful.
This isn't about giving up return to affect change. We are a finance-first believer in impact investing, but we think that impact investing not only can affect change on a large scale, but also can hit at market-like or above market returns at the same time.
Clients coming to us and asking, what options do we have as it relates to impact, both in the public markets and private markets, and I think it's great that we actually have solutions for both.
Done properly, impact investing can be a great diversifier to a portfolio as well as a great return enhancer.